Hey guys, welcome to this week's edition of the Swyftx Squawk. I'm Pav, lead market analyst here at Swyftx, and we've got a really interesting edition of the Squawk for you this week as we head into a pretty pivotal week next week. Now, just to set the scene, we had the first fall in inflation for the last 5 months, and at the time we did see the market rally. Obviously, this inflation issue has been a pretty contentious piece ever since we saw it rise in 2022, but even with this recent good news in inflation, we're still seeing the odds of a rate hike triple since last week. So that's what we're going to dive into this week, just looking to understand and decode what's happening here. What's the push and pull effects that have recently dealt the market pretty much the news that I guess the majority of people and analysts have been waiting for. But then at the same time, also, we're now seeing this sentiment from the market. Now, just to kickstart this whole conversation, this all revolves around the fact that we do have the next FOMC coming out next week. So this is the Federal Open Markets Committee. It's a group of people that are put in charge of economic policy in the US. They've recently brought in a new Fed chair, which we covered a couple of weeks back. And what was key in that speech, and which has constantly been a theme, is that this committee is aligned to two main factors: growth and inflation. And inflation particularly, they're looking to move towards that 2% long-term target, which has been a constant theme when we did see rate hikes kick off in 2022. And even when rates were coming down, they were still talking about this 2% target. So that's not changed, right? We know that's not changed. One of the major inputs for inflation as a metric, which as we have seen, that's that figure jumping down there, is the price of energy. And energy is also can be measured by the cost of oil, the cost to be productive. And with the recent tensions and flare-ups that we have seen, we've now seen oil skyrocket to back to $100. When we look to the Brent market, Brent crude oil, there are varying different oil markets out there, but the key takeaway is they're all accelerating to the upside this week, which again doesn't really play in the favor of if we're wanting to see inflation come down materially in the long term. Seeing these oil prices continue to go higher, that puts a bit of a headwind against the whole narrative that we could see economic conditions ease. And this matters for crypto, which we'll touch on in a second. But the key takeaway as to why we're seeing oil prices rise, the current thoughts are that, again, the blockade of the strait is causing issues with supply and demand. Further to that, we're now seeing attacks on vessels as well. We're not a political or social commentator in that space at all, so recommend you do check out the experts on remaining up to date on what's happening there. But the key takeaway here is that the market's dealing with, again, the same pressure that we've seen in the past, and we know it's been quite bearish for markets as it just creates more uncertainty, but also increases the input costs for everyone globally when it comes to fuel. And that could be what's leading this recent rise in the market's expectations as to what could come next. Now, this is a website called the Fed Watch tool by the CME group. What it basically does, it looks to use probabilities from the market to understand how is the market thinking about interest rates now and into the future. And we do have that meeting in 5 days' time, like I mentioned. In the last week, we have seen the expectations of a rate hike go from 11.8% to a now 35.3%. Quite a substantial rise there. And again, this is after the back of what's been a whipsaw week, right? Inflation cool, but oil also continuing to be an issue, and as well as the geopolitical conflicts being an issue. So just to hit on the idea that we have hit for the last couple of squawks, the big unknown right now is how long is the strait going to be closed for? What are the incentives for both these countries to continue to keep this conflict going? There are some people calling that Trump has midterms coming up and war never looks good for anyone heading into midterms. And that's where we're stuck right now, right? We're stuck in the middle. We're stuck between these tensions escalating. We're stuck with this idea that inflation only has just come down, but a major reason why it went up was energy, and energy is now back on the way to the upside, right? So when you're a policymaker trying to understand where this could be going next, that's where we start to see how they're going to react coming into next week. It's going to be a pretty pivotal moment. And this comes as well as this chart of Bitcoin, which we've been tracking for some time, laying out some potential scenarios for higher or for lower. We are now up against these previous highs, and we have seen the market pull back a bit now. So I think, again, as we head into next week, we get some clarity as to how economic policy may be going, and that impacts things like liquidity, and liquidity impacts assets like Bitcoin, Ethereum, XRP, a lot of it, you name it. It does have a knock-on effect that we just have to wait to see what happens. But I hope you found that insightful for this week. My take is we could see volatility continue as we wait to see how the market continues to position itself heading into this news next week and also out of it again, as well as potentially even some resolutions maybe to even these issues abroad, right? There's nothing to say we could see potentially an escalation or a de-escalation, and that is going to have an impact as well. So yeah, again, couldn't stress enough how much in the middle we are right now, but yeah, just that volatility as an outcome is probably the likely scenario in my eyes. But I hope that's been useful. We'll be back again next week to break this all down again and update everyone on how things are sitting globally. But until then, hope you have a good one. Thank you.